You're tweeting.
Good morning, and welcome to the AM Volatility Report. I am Mark Sebastian, the founder of OptionPit.com, and I'm coming to you from the great outdoors of my backyard, because where better to work than in nature and trade. If traders on the board of trade thought that they could trade out in nature like this every day, they would have done it for life, I'll tell you. But anyway, hey, reminder, our new option wheel service, if you go to optionpit.com/option wheel, you can try it for just $7. That's a screaming deal. 1 month. We do some regular webinars. We're going to start streaming some education out, and you get some picks that we put out, that I put out in terms of trades that I like in the near and long term. Optionpit.com/option wheel. It's pretty nice. So now let's get to the markets. Well, here we are, another day, another dip in volatility, at a slight rally in the S&P. The S&P finally broke and settled above 2,400 yesterday. You know, we'd seen some visits over 2,400, but nary a close. And then we finally closed yesterday, and we're getting a little follow through. I think you see more of that. I think there's decent odds that we could see things continue to move further north. I think you know, what are some good reasons to sell? And you know, every story ends up being a non-story. So until there's a real story, what we're looking at is a VIX of around 10, and it could stay there a while. All right. As I said, looking at SPY, you can see that look at the realized vol width here. It's as wide as you'll ever see, and that's 20 day. Take a look at 10. I mean, you just don't see that type of spread very often. And so it's hard to argue that volatility shouldn't be where it is. All right, so now moving on, let's talk about some stocks that we're going to be looking at. We're going to look at Amazon. It continues to move. It's a race to 1,000 between Amazon and Google. Right now, Amazon is in the lead, so it'll be interesting to see which one moves. Apple, second day in a row of just kind of sitting here. I never believe Apple is going to just sit for very long. It's such a hedge fund hotel. I think you could see a further popping out of it. Goldman had a big day yesterday and continues to see some rallying, and IBM seems to be in the middle of a dead cat bounce. So those are some things. So I want to spend today, we're going to look at some retail names, because they've been absolutely destroyed, and maybe rightfully so. But they're just getting wrecked, and the question is, you know, how long is that going to be able to, you know, is there a level where you get short these again, or is there a level where maybe we say, hey, this might be a level to sell some puts? You know, it's interesting. The strip mall retailers are now beating the mall retailers, where it used to be the other way around. So those are going to be the pieces that we concentrate on today. We'll also take a look at bonds, which continue to be too expensive and have high IV relative to VIX, right? The IV30 of TLT is now higher than the IV30 of SPY. So long-term bonds are now more dangerous than the S&P 500. If that's not a trade, I don't know what is. All right. Now, obviously, that's not with every index, but there may be a trade that develops there. All right, folks. If you have questions, you can email me, marketoptions.com, or call me 888-TRADE-01. Have a good one.